It is, of course, about money. So let's find out how it's affecting the markets around the world. We have Fox team coverage tonight. Rich Edson is on Capitol Hill with the domestic impact, but we begin with the international markets, which, of course, are already up and running for the day. David Piper is live in Bangkok, where it's late morning. Hello, David.
Hi, Brett. Yes, Asian markets, of course, are watching developments very closely in Washington, D.C. But today, they are firmer. The Japanese stocks moved into positive territory during the morning session. Hong Kong stock market is closed today, but other markets are also moving ahead. Asian investors had their first chance to react to worries over a U.S. government shutdown during Monday's trading, and they immediately sold off after recent strong gains. Japanese stocks fell heavily after 8 weeks of strong gains. Other Asian markets followed the Nikkei lower. Hong Kong's market slumped 1.5% Monday over fears America's problems could hurt the Chinese economy. Analysts say investors are worried the deadlock could continue and drag the markets down further.
So I think at global markets, investors are so disappointed, actually disillusioned with America. Especially American politicians engage in useless and pointless political gesturing instead of trying to solve the economic problems facing them.
Some analysts point out, though, that any U.S. government shutdown would be temporary, and that is supporting the markets. But they add investors are looking for the problem to be resolved quickly because Asia's markets are booming at the moment. Back to you, Brett.
David Piper live in Bangkok. David, thank you. Now for how the showdown will play with the American economy. Fox Business Network correspondent Rich Edson has that story this morning from the Capitol. Hello, Rich.
Hello, Brett. It's already played into the American economy, and it's probably already affected your 401k. We're not even 30 minutes into this yet. Take a look. U.S. markets down across the board as they closed last evening. The Dow Jones Industrial Average falling 128 points. NASDAQ, S&P 10 points. All mostly, investors say, because of fears about a government shutdown. And now that it's finally arrived, the Congressional Budget Office says the effect of a government shutdown does get worse the longer you get into it, as hundreds of thousands of federal workers are removed from the U.S. economy, along with millions, perhaps billions of dollars in federal contract dollars. And one investor says he's concerned about a prolonged fight.
If this takes a long time, gets into the debt limit fight, which I happen to think is coming, and that one is a different political construction and more power in the House among the Republicans and in the caucus. This then gets prolonged. We lose a lot of GDP, probably at the rate of 0.2% a month.
So that GDP loss is something when you look back at the 1995 and 1996 shutdowns, the last shutdowns here, you did have a loss in GDP in the final quarter of 95 and the first quarter of 1996, but you saw real economic pickup after those shutdowns. So there was a GDP effect then and a real recovery or a bounce from that then. But if you try to equate it now, Brett, the problem is that's a much different economy in 95 and 96 than we're looking at today. It was a much stronger economy, one that had much better growth than we have right now, and much stronger underpinnings, so that's something it's difficult to compare when you go back nearly 17 years. But the one point that the investors are making right now is how does this bode for the government debt ceiling fight, and that's one that Congress has to resolve by October 17th. Back to you.
Because, Rich, the debt ceiling fight is really where the market is most jittery, right?
Yes, yeah, I would say even terrified of the fact the U.S. might default as the world's reserve currency. It's a very frightening thought for investors.
Okay, Rich Edson live on Capitol Hill. Rich, thank you.